Hey everyone, this is Kirk here again at Option Alpha, the members only video, Monday, November 28th. After the trading session, it's about 6:30 here on the East Coast. So hope everyone had a really nice Thanksgiving long holiday weekend. Much needed for the markets. And I think for everyone, just to kind of calm everyone down, people get away from the markets. I think it's a good thing for people to kind of reset their thinking and their mentality. So, what I want to talk about tonight is the plan for the rest of the week and really the rest of expiration. Probably going to enter some more trades tomorrow, so be on the lookout for those. But I think we did a good job entering some trades before the long holiday weekend. Those worked out pretty good. Both the SPX, if you still didn't get into it, you can definitely move up your strikes at this point. I've emailed a couple people for the auto traders. I've even adjusted that up to as high as 1,000 on the SPX, 1,000 strike. But I think it's fairly easy to leg into this strategy and this spread. The SPX 950, 945. Those were very active today. Almost 200 traded on the 945s and a couple thousand on the 950s. So if you leg into them, you can definitely get into these strategies. But like I said, you can still move up your strikes to 975, 980 if you want to, and get in that way. With the extra time decay that we have in less than, I think it's 14 or 15 days here to go in the expiration cycle, 17 days. I think that you guys will be good to move those up. So what we're going to do is enter some more trades tomorrow. Still on the put side, the VIX has remained relatively stable, even though the markets are rallying, which is okay. So we've kind of put in a little short-term bottom here. I definitely think we will rally for the rest of the week. The consumer news, or retail news, has been fairly good over the holidays, so I think that'll give the market a much needed boost for now. So below is the expiration calendar for 2011. So I just want to go over this real quick. I think it's important to cover that we're into the last month here in December. And of course, we always have 2012 in the next month posted for you guys on the website. But it's a fairly short cycle. So we're here Monday on the 28th. Only a couple days or weeks in December. It's a fairly early expiration. And we do have a couple trading holidays coming up. Obviously, the day after Christmas, Monday. So just be aware of that one. It's not actually going to be before the Friday before, it's the day after Christmas. And then we have light trading all the way through New Year's and into January. And then we have another quick expiration as well. So just keep that in mind as you're making your trades. Obviously, the VIX is high, so it's been pretty good to stay with the front month options. But if we see the VIX start to really dip under 20, then we'll start moving out a month and start selling much further out in the expiration cycle. If you look at today's heat map of the market, pretty green. It's what they call an all or nothing day, really, and that's where most of the S&P 500 stocks closed higher. And this is actually the S&P 500 heat map, and really there's not much green, just a couple green here. AutoZone, which is kind of rare, that some of these retailers, and Sears are the pretty big losers today in that particular area. So we've had a really good day. I'd expect some profit taking a little bit tomorrow or the next day, so beware that we're not going to push up this high and this fast at the same rate. Same thing, advanced decline line for the NYSE, the NASDAQ, the Amex, all across the board. Advancers, look, 95% advancing, 5% decline, practically no or unchanged. A lot of volume for advancing shares. So pretty powerful stuff here. Pretty strong day, I would definitely say, off the bottom. Market harmonics, we just check out some of the put call ratios. Really not much to see there. They haven't really changed dramatically to make things too overly bearish or bullish. We're getting into the bearish extreme area on the put call volume ratios, but we're just not there yet. We're still in no man's land. We've definitely moved considerably off of the lows here, but again, we're just not there yet. The last thing I want to check out before we get on the charts is the German 10-year yield, compliments of Bespoke. They did a good job of addressing this and pointing it out on the chart, and that is that it's had a 55% basis point move in the last couple weeks here. So just when everything seems to be hunky-dory on the surface, the German bond market is now starting to feel the effects that have come over from Italy and Spain and Greece. if this goes to hell in a handbasket, then everything else will. The German market is really the light at the end of the tunnel for this euro mess. So if we start to see these yields start to really spread, then that's going to be bad news for the market. If we go back to some of the charts, just a couple things I want to point out to you guys as well. The S&P here, this is the SPY, and what I did here in green is actually highlighted the last two, or the last major drop, or that kind of crash that we had in the summer. We all remember this, that we never saw coming, and put the same magnitude and the same timeline on this as what we could see from here. So from the break of really 122.50, which is really good strong support, from that break, what would the drop look like at the same distance and magnitude? And you can see it would take us almost right up until expiration, but the drop would only take us down to about 100 or about 1,000 on the S&P 500 index. So even though it seems like a long distance away, can definitely be cut short. We could definitely continue to rally here. That's kind of the worst case scenario that I'm looking at. So I have this on my chart for the rest of the week and the rest of the month just to see where things are, just to make sure I'm staying out of harm's way. As we get further into this green area, though, then the chance of hitting down to 1,000 is going to become less and less and less. Taking a look at the Russell actually has been moving quite well into the areas that I've highlighted before. I've had this area here on the chart when the market was all the way back up here at 775. And so we dipped right down below it, but we're kind of sitting right on that support level right now. I think we definitely rally to 725 in that area before we start facing some major resistance once again. And then the VIX, obviously, pretty odd. It was down 7% or so today, but really hasn't moved. Still considerably above 30 on the VIX, and pretty long stretch that we've been above 30. We really don't see the VIX stay above this level as long as it has. I mean, really, the better part of 4 months, it stayed above 30. So pretty surprising, and something definitely to look out for is definitely more volatility in the market. Obviously, a dropping market or a rising market doesn't necessarily mean the VIX is going to fall, because we had some huge volatility swings, right? Down really big on Friday, and then up really big on Monday here. So consider this, I guess, just optimal time for selling puts, and that's what we're going to do. So as always, hope you guys enjoy this video. Please let me know if you have any comments or questions, and as always, happy trading.